Alright guys, let's quickly mark the homework, classwork. It says on the 15th of May 20.2, it was discovered that DLE's account of 3,600 is 4 months overdue. Bev Stores charged her interest of 12% per annum. Please note that per annum simply means per year, alright, for a period of 12 months. Record the transactions in the correct journal and show the entries in the relevant ledger accounts. All I'm going to do, guys, is to take the 3,600 that DLE owes, multiplied by 12%, multiplied by 4 out of 12, because this percentage is for the whole year. So I'm going to multiply it by 4 out of 12. This process is called apportioning, all right? I'm simply apportioning it to 4 months. I just need interest for 4 months, not for 12 months, okay? And that'll give you 144. Okay, that 144, guys, is simply interest on overdue account. So basically we are going to debit DLE's account with that 144, and we are going to credit interest income or interest on overdue account. This transaction will be recorded in the general journal because it does not meet all the requirements to be recorded in any of the other journal. It is not cash. This is not the money that we received, so I can't record it in the cash receipt journal. It is also not the money that I have paid, so I can't record it in the cash payment journal. I didn't buy on credits. Basically, this is interest on that 3,600. That 3,600 was recorded in the debtors journal, but in this case, guys, remember in the debtors journal, we actually record transactions where a debtor bought from us on credit. We bought from, well, DLE bought from us on credit, and items bought were worth 3,600 in total. So that 3,600 was recorded in the debtors journal because we sold goods to DLE on credit. But in this case, guys, we are charging DLE interest. So basically, we are not selling goods, but we are charging DLE interest. When we charging interest, we have to record it in the general journal. It cannot be recorded in any other journal except the general journal. I hope that makes sense. In the general journal, we will debit DLE's account, the data. This is because DLE will now owe us more. DLE won't just owe us the 3,600, but DLE will now owe us the 3,600 plus interest. Remember, guys, the disadvantage of buying on credit is that if you don't pay your debt on time, you will be charged interest. While for loans and other items, guys, you will get charged interest whether you pay on time or not. So basically, guys, DLE will be charged interest for not paying the account on time. Because DLE is a debtor, our debtors control will also be affected, and it will be increasing on the debit side. Interest income is actually income, as the name says. So income increases on the credit side. Beside the fact that we have earned income on that 3,600, we are going to earn more income by charging this person interest, okay? So that interest is income, and just like any other income, income will increase on the credit side. However, this will not affect our debtors control. Please note that you can call it income, interest income, or you can simply call it interest on overdue debtors. And your narration is that interest charged for 4 months actually. debtors control. DLA will owe us, meaning that our total debtors amount that is owed to us will also increase by the interest we charged DLA. So I'm just going to write 20.2 May sundry accounts, general journal. So this comes from the debit side of the general journal, and it will be 144. It is basically that amount. Interest on overdue debtors. This is interest income. Income increases on the credit side, so we'll just write sundry accounts, general journal, and the amount will be 144. DLE balance will be 3,600. Interest on overdue debtors will be on the debit side. And this is because DLE will owe us more because of that interest we charged DLE. So basically, when you take 3,600 and you add it with 144, you will get 3,744. So basically, guys, DLE owes us more because we charged DLE interest of 144, which was overdue for 4 months.